CarMax is in trouble and they're panicking. With sales in the toilet, profitability in the toilet, and cost of doing business is rising. The CEO is now gone, and that resulted in a 24% decrease in the overall stocks. Now, CarMax is one of the biggest competitors in the retail car business, and we've looked at this a long time, and we've said, look, what's going on with the retail business? With the increasing price of brand new vehicles, it scratches our head and wondering, well, how can the used car business not survive? They can literally write their own checks. And when we look at sales retail giants like Carvana, who've advertised absolutely the ability to almost write their own check and sort of create their own story time, the fact is CarMax isn't in the same position. CarMax is struggling. Huge profit declines. Of course, now they've had to punt the old CEO out, and an interim CEO is coming in. One who manages Lululemon. You know those tight pants, those workout shorts? That's right. That is the interim CEO coming in to replacing the outgoing CEO, strictly because profits are in the tank. Why is this going on? What's happening over at CarMax? And when we look at the entire business, we realize that for quite some time, at least since about 22, at the end of 2022, a lot of these car manufacturers struggled to get new inventory. And when they did, they overcharged. Stellantis, Ford, a lot of them cranked up prices on their new products. It was literal sticker shock for a lot of people like you and I, walking in there looking for a new vehicle, and all of a sudden, 5 years earlier, that same truck was maybe about 60-50% more than it was back then. What's going on? Well, with new car prices through the roof, it pretty much drove a lot of customers down into the used car sector. Well, that's where a lot of companies like Carvana and CarMax were there to just catch all of the happy customers that were willing to spend even 80% of a 5-year-old vehicle versus buying brand new, because it just meant they saved some money. Now, we know that for a period of time, used car inventory was trash. Really all we were able to see on a lot of car lots. And when I was out there looking around, a lot of the used inventory was literal trash. Stuff that was underwater, from a lot of the storms that we saw over in Florida, were making their way back into the market. We saw a lot of other problem vehicles, cars that were glanced off curbs. They were underwater, they were damaged, poor service history, accident history, and they'd scab it together and put a quick Band-Aid fix on it. And people were still willing to pay for these cars because they could not get or didn't want to wait for a brand new vehicle. So that's where Carvana absolutely knocked it out of the park. CarMax, though, what was going on? One of the biggest used car retailers, you wonder, how could they not survive in that climate when customers were looking for opportunities to buy used vehicles? Well, I think there's a few things going on there. CarMax reported in a quarterly earnings call in September that there was a few major factors, and that's how they stay in business. Poor sales, net earnings, and gross profits were all factors that fell way short. And unfortunately, if you're not selling cars, you're not building profit, and your earnings just aren't there, what's left? Nothing. So you've got to look at a few key factors, and I can't help but think of a lot of these businesses these days are struggling to stay afloat. Now, I don't know, from the brand new perspective, things are a lot more intense. Obviously, new cars are subject to things like tariffs and, costs of supply chain, building some of these vehicles. There's many more moving parts in the brand new vehicle manufacturing, and certainly the profit sharing abilities there. But in the new car, I wonder, a lot of these guys, all they do is put a $100 saddle on a $10 horse. They'll take that old piece of crap car, slap it together, put some new tires where those other ones were bald, and then throw it out to the car lot. Sometimes poor judgment call on some of the trades or some of the vehicles that they take on are what can cost a lot of these companies money. So used cars do have a lot of variables to think about. Condition, accident history, flood history, and all those factors can play a big part. Now, I look at a lot of these vehicles and I think, I've seen these used cars, and I got to wonder, CarMax, is it, where are they falling short? I'd like to hear your thoughts down below, where you believe that CarMax is falling short, when in fact Carvana saw stock prices go up drastically by as much as 52% in 2025, where CarMax dropped down 50% roughly in stock prices in 2025. What is going on in your own personal opinion? See, because the way I see this, a lot of these car manufacturers are struggling to stay afloat because they're competing with the likes of the China markets, the EVs, the market share on EV versus ICE vehicles. And what's going on there is a direct factor as to the buying habits of the buyers out there, the brand new car buyers. But when we think about some of these used vehicles, most used buyers are just looking for good value, quality and good value. And so if you're not providing good value or quality, people go somewhere else. So is that a conversation they're just not buying if the low sales are a contributing factor? I mean, ultimately it boils down to sales. You're either making profits on each sale or you're not selling enough product. It's volume or it's profitability. What does that look like? And what's going on at CarMax? And we got to wonder because, again, a lot of these retailers were printing money hand over fist back in 22, 23. Then, of course, things start to shift. We saw, of course, inflation start to kick in. And, well, here we are. The Fed's changed rates. We just saw a recent bump or drop down in the Fed rate as well as the Bank of Canada rates. We saw a couple quarters here recently. But is that enough? Ultimately, this is a sign of the times. Poor sales and as well as poor profits. Or is it? I mean, let's be honest. Look at some of these retailers are making money hand over fist. Again, you can't help but compare directly to the Carvanas of the world. What's different between Carvana and CarMax? I mean, ultimately, if you stand and have that conversation in isolation about CarMax, I got to think, you know what, it really comes down to, is the value add there? What are their trade-in policies? What are the types of vehicles that they gravitate to? Those are factors that are going to draw customers in or not, right? High value vehicles. A lot of times I look around at car lots, and a lot of these used car lots will have certain vehicles. And I can see distinctly, even not necessarily CarMax, Carvana, I'm even saying franchise car dealers that fill up their used car lots with used inventory. And it's pretty clear to me the ones that are always doing well. Sure, you've got to have a good blend. You need to have inventory that brings customers in. You need volume cars, you need quality cars. Hondas, Toyotas, Lexus vehicles are going to always bring in customers. You're always going to have a steady flow of customers. That said, the profits usually aren't as much because a lot of times those vehicles have, relatively good trade-in value and the equity built into those vehicles. So it's hard to negotiate people out of those vehicles without, essentially paying top dollar. But then you get a lot of the European import vehicles. And if you get too many of those vehicles, sure, you might get bigger margins because you can buy them for a song and a dance. And people trading those vehicles in quite often do it under duress. Bad problems, expensive repairs that are imminent, or they're just stressed out that warranty ran out, so they're willing to dump that used Jaguar or used Audi just for a song and a dance. See, so if you have a lot of those types of products, you may have a big margin as a dealer that takes something like that in as trade, or at the auctions, a lot of those high dollar vehicles or luxury vehicles will have big margins available, but they won't necessarily have the volume sales. So you might sell one Audi per month, but you might sell 6 or 8 Hondas or Toyotas. You see kind of how that works. So a big part of this is how that business, kind of stacks itself against the competition. What type of products do they sell? EVs, we know they're having to give those away, especially in the US. That's a big problem selling a lot of those vehicles. Here in Canada as well, I'm seeing a lot of people think that their EVs are worth way more than they are, but I think it's a bit of an eye-opener, an awakening for some of those sales and some of those people selling on the private market to get those cars sold. But I'm also seeing in the car lots, people now, some of these dealers are trying to sell used EVs and they're realizing they're not selling, they're sitting forever. So that's another big factor why some of these used car retailers may in fact struggle selling cars. Maybe they have too much electric vehicle inventory, thinking that they're being more progressive, more ahead of the times, and having more EVs because that's what the growing market share is. But in actuality, most people just want a reliable, practical used car. And so cars like Toyota RAV4 will always sell, or Corolla will always sell, a Camry or an Accord are easy cars to sell. Mazdas are easy to sell. A lot of those cars are easy to sell. Small to mid-size SUVs, even by GM, Ford. The quality may not be there, but if you're showing value in a conventional vehicle, people will always come in some capacity. As long as it doesn't have accident history, as long as it hasn't been underwater, and everything's clean, local cars also sell very well. As well, some of these dealers, if they're offering up extended warranties, are also able to maybe sell products better. They may be able to incentivize the sales of the used car products by throwing in an additional warranty, maybe a 6-month warranty, a 3-month warranty, full money return. See, a lot of people don't buy in confidence, and that's where they stress out. So again, a lot of these retailers, sales could be down for a variety of reasons. Why? The wrong type of vehicle, the wrong type of clientele. Maybe their margins, they're shooting for too high a margin and they're missing the boat entirely. Maybe they need to look at their entire structure. Now, I'm not a CEO and I want no part in being a CEO of any of these big automotive retailers, but there is a lot of magic voodoo that goes into these sales of these cars in order to keep the cash flow moving, so to speak. But ultimately, what we're seeing is the CEO is getting walked. We're getting new chairpersons at the head table. Profits are in the toilet. Shares are in the toilet. And things are looking kind of bleak right now for CARMAX. Unfortunately, looking forward right now, the industry as a whole is flooded, of course, with high-priced, high-dollar new vehicles. Used inventory is shrinking. Less buyers out there willing to spend. And of course, a lot of people just don't have the money these days. There's a lot of uncertainty in the market. Of course, we see people with increasing levels of credit card debt, student loan debt, and all kinds of other problems are leading to the fact that less and less people are buying. Could that be one of the problems for CARMAX? I'd like to hear your thoughts down below. Hope to see each and every one of you real soon. See you then, everybody. Bye-bye.